Brilliant. And profitable trading in this volatility. So let's get to grips with where we are in the market. You can see the ticker is the top right if you want to track where we are looking. And a really good day on the markets today, and I'll go through that as we get going. Dollar index. So Fed meet middle of next month with another potential rate rise because inflation is stubbornly high and we need higher rates to shake this out. Is that going to induce a recession? Yes, and we'll talk about that as we go through the charts. So if this dollar, then suddenly the dollar basket here sits above this resistance, then we are potentially going to keep going. MACD is making a lower high here as we sit up against this resistance, but the averages are open. This is the 20 and the 50. We're some distance away from it. It shows you how strong the dollar is. These are 50 and 20 moving averages, simple moving averages, not exponential. And as long as the volume stays up and these averages stay open, we look as if we can go further. That spells a lot of problems for the US. Spells a lot of problems for markets in general, but let's have a look. We'll dig into that in more detail as we get going. Obviously, the biggest component of the dollar basket is the euro, and you can see the euro is just sitting on this 2022 support, and so if we subsequently break that, then we are in trouble. Well, the euro is in trouble, and the pound is very similar. Pound is sitting on this floor. That's actually technically a buy signal there on the 23rd, in that we've had a new low in this range and we closed above. I say technically because it's not at the end of a run, it's on support. So if that appeared like this, if that appeared on the further down here, I would trust it with a greater extent. The fact we're just sitting on support, all we've got to do is break that low and we're lower. Averages are crossed potentially back up. Anyway, for the moment dollar is strong and we're right on the line. If we see further strength in this dollar, that's going to tip the euro and the pound over. Okay, so if we then look at gold, gold is attempting to hold here. If you ever get a strong dollar and a strong gold, head for the hills, because if all these safe havens are getting bought, that's potentially sucking money out of the main stock markets and liquidity will dry up, and that spells problems. So a normal relationship with gold is divergent with dollar. If dollar is coming up, gold would typically fall down. If you've got strong dollar and strong gold, then you've got problems. Normally, I say that because that's exactly what happened in 07-08. Right, let's start looking at these indices. Let's start with UK. The FTSE has been remarkably resilient. I'm amazed it's not lower. You've actually got a 200-day average on the lows here. We're out all the time you're out of this funnel, we could continue to go lower. So at the moment, any pullbacks around the 74, 74.50 or into 7,500 are shortable. the fact we're sitting on the 200 is not any sign this is over for me. I think that we could easily come, just drift lower and potentially accelerate. Okay, but in the meantime, the FTSE has been very resilient, and shorting it has not been anywhere near as much fun as shorting the US indices. Here's the Dow. So ever since we topped out at 34,280, we've seen nearly a 1,500 pip drop. And so the main support down here is 32,400. We're under the averages. If we continue to lose our footing here, with the Fed ahead at middle of September, then the next stop, well, even ahead of the Fed, forget now. The short term, the main support's down here at 32,200. And the highs are still selling. Okay, so the August lows are right down here, and all the time we are under this area here. At the moment, every time we knock into this, we're selling. We've not come in contact with the average yet, so it would stand to reason that we would most likely see continued selling and a pullback down there. Cyclically, that fits in with the typical 20-year average. 20-year average says you would dip into the back end of August, potentially pick up in the middle of September, pull back late September, and if we come back and hold, then we could potentially get a Christmas rally, wait till Thanksgiving, and get into December. Okay, that's the bullish scenario. Obviously, we are tipping over. We've sold at this resistance level. If we come down here and can't hold here, then any highs are to be sold, and we could make our way back down to 2020 lows and possibly even lower. So I think the Fed are not likely to back off on rate rises. Quantitative easing is being pulled back further, and these are clear evidences. There's clear evidence of that in the marketplace, and so that this market at the moment is not supported to the upside. Nasdaq tells the same. So we popped up above this 2022 trend line. So to pop up and pop underneath it is very bearish. So unless we close above this 12,900, 13,000 in the next couple of days, potentially, we are going to come and meet these averages and potentially keep going. Okay, let's look at commodities. Right, what the main theme of this quick review is, how do you trade this volatility? How can you make a profit in this kind of market? So I'm just going to finish off talking about the main key markets and then answer that question. But I wanted you to get our heads around where this market is sitting right now, with a view to answering that question. Okay, so at the moment these highs are still selling, and the dollar is still very strong. Fed's ahead of us, so we've got to be careful. If the main markets that are beneficial to the upside and can really exploit inflation is energy and commodities and banks. Very simple. Those are the three sectors that are going to benefit from high interest rates. Banks make better profit margins with higher interest rates, assuming that the economy is still on its feet, that is. Stands to reason that, particularly with geopolitics at the moment, energy is being squeezed, and we talked about natural gas right back in April 2020 onwards. We'll come back to that in a minute. Other areas that you may or may not be aware of is the off-spin of the commodity super cycle that we're in. I'll talk about the super cycle in a minute. The spin-off from that is, or one of the spin-offs, is commodity brokers. And of course, the big, the miners and the producers. These are, so even in a market that is coming off, there is still plenty of opportunity to buy in a downturn in this environment because of inflation. So if you look at areas such as start by looking at this is EMG is Man Group. Man Group are commodity brokers. So you can, from this drop into March of this year, in fact, let's tidy this up because that's awful. Commodity group such as Man Group are always going to benefit from this. So we saw a buy structure to this chart back down here. So all these lows here in January and consequently the pickup in March is all on volume. Volume is the lifeblood of the market. So you see a big pickup in volume on as you come into this low here. You get a buy signal here on the 25th of Feb. It pulls back to that buy signal to retest it and retest the trend line into early March. Volume picks up and then we just go on a run. So even now, this 242 here in Man Group, if we come back into this support here, I think this is still an opportunity to buy into this Man Group. We've recently seen 270. If we can pull back into this area here from the early August, down there at 235, 240, then and subsequently close above 270, I think we're going to go to 310. All right, so even if we can't sustain this price up here, any market that can sustain this and a resistance area like that, just buy the dips. If the volume increases, and then trade that up to these resistance levels up there. So keep an eye on Man Group, even though it's come from 170. We're still only in the 240 area, so 170 to 240 is still, I don't think, a great shakes, given what I've said about the kind of market we're in. The other one to look at for is another broker, TPI Cap. This went on a decent run from this floor down here at the power mark. We're still a fairly modest price. We've got a lot of resistance up here. So at the moment, I think this is potentially a big box play. What's a box play? It is when you get trapped in a box, surprise, surprise. These boxes can take a long time to pan out. So at the moment we are at the top of the box. If we fall back into, say, the 140 area, 130, 140 area and get bought. Particularly, there's a big bust up here on this chart. If we return to that breakout area and hold, which is around about 130, 135 area, I would get back into this and then see if we can start to get back to climb up here and subsequently get up to these resistance areas on TPI cap. So decent spikes up in volume. When this drops, you're getting decent spikes in volume. So at the moment, we seem to be fading at this resistance area. So see if you look to see if this can pull back into the autumn and then pick up a low at a later date. And following on from the theme of commodity supercycle and inflation, it stands to reason that stocks, big producers like Rio, traded this along here, started taking profits up here. This pullback under 445 was good. But coming up, volumes are tailing off here at the moment. So if we can pull back to something like 45, 47 and hold, or even lower, a full-blown pullback to 45, I will buy that. This looks like, so we had a nice wave pattern into these highs at 60. Then we're seeing a three-wave correction, and now we're seeing a lovely cut pattern. If we get a handle, then I will be buying on a pullback down here to see if we can then stretch our legs and break up. And the volume suggests that every time you dip in this one, if you look at this area here, volume picks up. Look at this pullback here, volume starts to pick up, and so on. You get the picture. Every time this is dipping, you're seeing volume pick up. So if we subsequently break that resistance, sit tight, because if we can break 60, we can get 65, potentially 70, 71 on something like Rio. So all of these stocks are playing to the inflation game that we're in at the moment and the commodity super cycle. The flip side of this is, of course, retail. There's more examples of this. You've got, okay, Gem Diamonds had a fantastic run, and for some reason that's fallen off the edge. ELM, Elementis, this is a chemicals company. That's pulled back. We had a big breakout from this 101.96 £1 mark. We saw 120. This is pulling back into a very, very decent support. Volumes are thin on the ground on this one, so be careful of this one. If the volume doesn't increase on this, back off. But if we can get an increase in volume down here, Elementis, I think, is potential good one to trade. Glencore. So the strategy here for stalking the sector, buying the dips, is working. We're coming up on volume here, but any pullback to 467 could see you get back to 550 plus. So you've got a nice pattern, nice couple and handle pattern. The dips are getting bought. So any pullbacks now on 450, 460 are still viable on that one. Don't chase the markets. Wait for pullbacks on these stocks and trade them subsequently. If you now look at, if we step across to the US market, look at this CCJ. You can see all this trend line support down here on CCJ. This area here was fascinating. And once we started to come out of it, you've got a big bar here that says this support is getting bought. Then we go on a big run. We pull right back. I identified this grey zone as main support. We dropped underneath it and then started gapping up. So I think there's plenty of time on this. This is a big resistance area. I think there is an opportunity in this one if we can backfill at some stage soon. Okay, so just another example is FCX, big copper miner. This is picking up now. This has been on a big run to 51.75. We've got potential head and shoulders here. Volume's picking up. I think this is still viable if we come down here to 30 and so peel back into this big bar here. I still think this is viable. If we don't get above here in the next couple of days, then I would potentially raise your stop and be very careful. But this FCX, big US copper miner, is looking good. All right, let's look at UK miners. These are the most likely beneficiaries of this environment. We come out of this squeeze, we've pulled back. I'm in this one around about the 18-19 mark. Volume has slackened off, but it's beginning to pick up again. Plenty of time to get back into this. You might still get a 19-20p entry on this miner. If we subsequently close above 21, I think we're going to go to 25. PAF, look at these tickers up on the right if you're interested in these stocks. I think I really like this one here. I think it's a nice cheap miner. I've looked at their balance sheet. That all stacks up. If we stay above this 19.5, 20p mark, I think this miner will pick up. If the volume doesn't pick up and the price, and we don't close above this 22, 21, 22 anytime soon, then this isn't going to work. But this is a powerful chart pattern. All the key levels of support have got bought on volume. So this is typically what you need to watch out for. This is my checklist. That's okay. I forgive you, Stephen. Other miners that are going to benefit from this. Let's look at Hochschild. Okay, this one is fallen by the wayside at the moment. We've got trend line support underneath. The volume has been picking up, but the price, this is one to stand back from at the moment. Unless this starts closing above this zone, I would back off. So for me, I wouldn't touch this at the moment. There are signs this is viable from the point of view that the volume has been picking up. But if we don't get back inside this area here, I won't touch it. So I'm happy to pay a higher price if we close higher, if the volume ticks up. Otherwise, I would just back off. So this is the sector. So miners, banks, commodities, commodity brokers. These are all the participants in this environment-ridden market that should do well. Okay, so I'm going to underscore this area here. So I need 71. The close above 71 is going to get me into Hochschild, HOC. Right, sentiment. This has already been on a run. So this is the head of the game. This is all miners, by the way. These are all miners. This particular one is already, the run is already underway. been on a good move. So from 74, we've seen 95. I think pullbacks are still viable on this one. If we fall back into that moving average here at 90 and hold, I think we can go to 105 and 110 plus. All right, these are good patterns. Notice how down here, this looked, if I take all this rubbish off, in fact, let me take everything off. Go right back to the bare bones of this chart and then start to look at the key level of support down here. The key level of support was in December last year. The key level of support was 76. Now, don't be put off by markets that break key support, because if they break a key level support as they did down here, but then immediately close higher, that's incredibly bullish. And it's very common in commodities and commodity related stocks. It's very common. It shakes out weak hands. But really, in terms of institutions, if you see a pickup in volume and the main institutions are buying this stock, which you can see from this level down here, this makes this stock all the more interesting to me. So if you go back to Griffin, no, what was it? What were we looking at? Hochschild. So the fact we've done the same here in Hochschild, we've broken support. So if we subsequently close above 72, that could be the signal that this stock, HOC, is going to do the same as this one, CEY, Centimin. We could see a repeat of this pattern if that Hochschild closes above that area that I've just identified. Okay, Sylvania, I think these guys are platinum, I think, from memory. Back off of this one, it's very scrappy, very untidy, not suitable. But PAF and Hochschild is something I'm in. Hochschild is something I would add to. A couple of US miners. This is a gold miner, currently struggling. But if we get back above this 415, volume is already picking up. I think if we get above 415 and subsequently 450, I think this is going to run. Notice that we've got a potential shoulder, head, shoulder. This is the neckline. So a close above this area here could signal that this is ready to pick up. We've got a gap here and a gap here. So if we can get this to move, I think we can come and find these gaps. I think these gaps will get filled and that will reward you handsomely. Think about this, the risk-reward ratio of this stock is extremely good if this works. Because if this closes above this 450 mark, and you buy sort of 430, 450 pullback, it stops under there, that will be your risk. And that gap fill will be, and that gap fill will be your potential reward. So that's a small amount of risk for what could be a handsome reward. And these patterns are very powerful. So a head and shoulders confirmation could so easily take that back up to those highs. Okay, so that's a US gold miner. Let's look at a US silver miner. Same principle. Same head and shoulders pattern. Volume is looking like it could increase. It's not confirmed yet. But if we break above that level there and hold above that triangle, that could give you a runner. If we now look at silver itself, I'm very bullish on silver. So this is silver. Again, look at the volume that came in on yesterday. So the chart is still suffering on the back of a strong dollar. So this may still come back down to these lows, 18. However, if we close above this 19.5 and subsequently 20, I'm in. But in the meantime, just makes me wonder the fact that the price is very weak still. Makes me think that you could still see some lows. All right. So I've talked in 35 minutes, I've talked very briefly about the impact of this inflation environment, this volatility we've got on the dollar, on dollar pairs, on the impact on the indices, the weakness in the indices and the fragility of the indices. But the subsequent flip side on the strength in commodities, commodity brokers, and the miners. So that's the split in the market that we've got at the moment. And that is also at the sacrifice of the technology market. If you look at technology stocks, they are still struggling. This is Twilio. I think Twilio is a great product. It's a great company, but this market is just not doing it. This was up at 45.5 bucks not that long ago, February last year, and we are flailing down here at 7 bucks. Horrendous. Palantir, much talked about Palantir. That's stuffed. DKNG, these are all so-called growth stocks that are really struggling. Let's look at ones you'll know. Let's look at Uber. Okay, Uber's been on a run. And I would suggest that I talked about Uber, marked all this up as this was flailing down here at 20 and 2050. It's been as high as 33. When these US stocks go, they really go well. So although some of these are very beaten up, if you get these patterns and you get the increase in volume, stay with them. I think this Uber could come all the way back to 25. I would not chase this market. I think that might find its way all the way back to 24,650 and peel back to that breakout area. If it does, I would be very interested in that Uber. Right, any questions? Let's look at some of the big boys. Let's look at the big stocks. MU. Wow, this is a big chip manufacturer and it's really struggling. Nvidia, really struggling. Really having a hard time. If something like Nvidia can't push back above these levels, then the market is in trouble. Let's look at banks for a moment, because I've talked about banks and I'm not showing any banks. So let's look at, didn't wherever it is today, never mind. Let's look at Barclays. We're on a decent run early in the year up to 210. I think these pullbacks are buyable. The volume does not suggest that yet, so this may fall out of this pattern. 170, it's really struggling with 170 at the moment. If that is a box play, then I think we can expect a deeper retracement. So I would stay put on that one. You may get, it may fall back into this 150. In fact, I think the most likely scenario is that will fall back to 150. In the meantime, let's look at Lloyd's. So these stocks have been on a run, albeit not a particularly impressive one, but they have. But this sector has, we got clobbered, did a decent corrective wave here, and then we started to get some energy, but it just ran out of steam. There's no volume, so we had a deeper pullback into this breakout area. So, and then we've gone on a three-wave move up here. I think if we get another corrective wave around the 40-42 mark on volume, I think Lloyd's is viable. But obviously I need an increase in volume, and I need to see a higher close, and then I will get in, and then you potentially year end might see 50 plus. You might do. Right, any questions? Otherwise I am just going to leave it there. So I've given you a few ideas in terms of miners, banks, commodities. Really studying silver very hard. I like the wheat. Okay, so I'm hoping for a deeper pullback in the wheat, but if we can pull back into this area and hold, volumes that are weak, then I would expect this to get back to these highs. Very bullish on the wheat. I just need a deeper pullback. Silver I've talked about. Gold is struggling. Looks as if that could come lower at the moment. It's still in potentially this downtrend. Gas. Yeah, just waiting to see if we pop back above this resistance and hold. If so, I think we can go higher. This cycle is normally not over till middle of November, first week in November. So here we are back in August with a 1, 2, potentially wave 3 is still in progress, potentially. But we need to see the volume maintained and that high held. At the moment, we do not have that. Right, I'm off. Thank you very much for attending, and we're back to the normal Monday sessions, 6 o'clock on Monday, so I will look forward to seeing you then. I'll send out links at least an hour before, now you're registered. If anybody listening to this and not registered, let me know, and I will make sure you get the link. Thanks very much, guys. Have a good evening, and